Good morning, everyone. We have the management of Yash Pakka today. Thank you, sir. The team will discuss the Q2 FY23 numbers. Over to you, sir.
Sachin, would you like me to start? Okay. Great. Namaskar, all the investors. Thank you again for joining in and for your trust in us. We are clearly seeing a lot of interest from the investor community. Our idea is, of course, to keep investing and growing our business and remain in the direction of trying to leave a cleaner planet. So I'll quickly give a round of little presentation on what we are trying to do. Mehak, I cannot see the option of sharing my screen. I don't know, you might have to make me the host.
Sir, you are the co-host.
But it doesn't give me that option. It just gives me.
Sir, host
option.
is Jignesh sir. Jignesh sir, can you pass on the host?
Can you pass on the host to me? I think it's not letting me share my screen. It is only giving me other options.
I made you host.
Okay, hold on. I might have to log in again, it seems.
Wait, sir, you can leave the meeting and make one of us the host, and then you can relog in.
Okay, sure.
Sir, can you make me the co-host? And can you add a Jagdeep sir in this?
Jignesh bhai, it still doesn't allow me to share content. It just allows me to share different aspects. So one of you may have to show the presentation.
Can you try once now? Okay.
No, it just gives me options to share a drive or a website or whiteboard on an iPad.
Okay, I'll share the screen.
Okay.
My screen visible to all?
Yeah. Can you just put it on slideshow, please? So welcome all of you again. Thank you for your time. This is our investor meet for the last quarter. And we have a singular dream as a company, which is to leave a cleaner planet. We can keep moving, Jignesh bhai. So the question is how, and we've taken a very clear aim to basically provide regenerative packaging at scale. Next, Jignesh bhai. So there are three areas the company focuses on: food packaging, food carry, and food service. The current work on food packaging is on the flexible packaging side. Back again, please. Yeah. And the food carry domain is through paper and through compostable mineral pellets, which we are launching now. And food service, of course, you're all familiar with, is our chuck line, which is towards focusing on molded fiber. Next, please. So what are we doing? The next part. So the first is to focus on innovation, and for that we are trying to build a state-of-art research facility right now, and this will be based in Bangalore. It is about between 10 and 20,000 square feet of space, and most likely one of the big premier research facilities. And the idea is to build the world's first kind of focused compostable packaging lab. The second is to build intellectual property in terms of applications and through manufacturing and commercialization. We are also tying up with numerous global organizations to build and provide solutions. We will be announcing certain great innovators who are joining this team to create different formulations, novel products in the coming times. And we are also working towards working with a lot of startups, enabling incubation and acceleration and ideas through this process. Next, please. The second part is to scale manufacturing. First part of that is to enhance and expand the Ayodhya facility, which has been a little bit delayed, but we are at it. We are already at the basic engineering stage, and it is going to start moving much faster now. The second is to finalize the global manufacturing site, and that I have personally been involved in the last 3-4 months. Last quarter has been spent mostly in Central and South America, and we are very close to finalizing that site. Of course, this will need effective raising of capital, and that is also going on parallelly. There's a lot of customer tie-ups that are happening. There's a lot of possibility of structuring and building financial structure for that. The next is also looking at further expansion sites in India and also in Northern Africa to serve the European market. And that also we have separate teams focusing on that. Of course, in order to succeed in this area, we have to strengthen our project execution team. And again, we are working on hiring some really exceptional talent for the same. Next, please. Jignesh Bhai, next, please. The third area is that of strengthening market and product. There again, a lot of work is happening. Can I request everybody to mute themselves? There's a lot of background sound. Or Mehak, if you can just mute everybody, if that's possible. Okay. The next is strengthening of market and products, because that's the core of the business. So we are trying to work towards building a stronger product range from our own stable, but also through outsourcing mechanisms, both on the side of molded fiber as well as various other substrates. We are working towards building Chuck as a strong sustainability partner for brand, where we provide end-to-end solutions. We are looking to expand internationally and launch products. There has been a significant study that has happened in the Northern American market. We are also looking at Middle East, but of course, for that, we need a strong supply chain, which is being worked on. I'm sure my colleague Satish will talk about this more. Can you go back, please? We will be strengthening our technology to ensure there is a strong system and supply chain built for transparency and delivery efficacy. And again, we are also working towards building a stronger team to enable global leadership in the compostable packaging market. Next, please. So these are our targets. This is my final slide. These are our targets for the current quarter. And of course, more or less, we are in line with the targets we've taken in the previous quarter. The first part is to do a financial tie-up and team building for Ayodhya project. That's of course our most important and the most imminent project that has to happen. And again, things are in full swing and they will be tied up within this quarter. The second is finalization of international manufacturing. And again, in the next week or so, we'll be back in Central America. And the idea is to finalize the site, the partners, the funding mechanism, etc. The third focus is the outsourcing mechanism for the brand Chuck and expansion of products and building the whole idea of sustainability partnership. And the fourth target is our innovation domain, where we are going to establish a strong lab in Bangalore. And also the two products which are coming out now are in Flexi Pack and Mineral Carry domain. Both those will be launched in this quarter. So that's the overall scenario and the focus from my side. I think, Jignesh Bhai, if you can take over and move to the next slide, please. Jagdeep, I think over to you.
Thank you. Good morning, all. The overall business performance for second quarter has been pretty well, though on the numbers on the top line and the bottom line on the absolute figures, the top line has been the ever highest of 87 CR in pulp and paper business, with the profitability of 19 CR as a bottom line. So we also bagged National Award for Excellence in Water Management by CI, held in last month only. So we were nominated as the best performing unit among three other paper industries for water management system. So we also so if we talk of the profitability is significant. If we talk of the profitability percentage wise, overall manufacturing versus, so there has been a hit on the fuel pricing, but eventually this is a stocking. This was the highest stocking time for the fuel, but eventually we will see it's mitigated during the next quarter. So we also, as a manufacturing unit of Ayodhya, has been certified by Great Place to Work, and it would be I think a pride moment for all team members of Ayodhya unit, along with associates and stakeholders, that we had been certified among top 75 industry manufacturing websites companies in India. So this was overall scenario for the third quarter. Thank you very much. I'll hand over to Satish.
Good morning, everybody. Thank you for attending this conference call. Business performance in compostables, the last quarter was all about growth. So the first thing that we wanted to do is to continue the innovation in launching. Continue the innovation by launching new products. So we have been talking about the launch of delivery containers for a while, and this actually was put into action. We have started shipping out products to our customers. So that's one good thing that happened in the last quarter, and the reception has been great. In terms of sales growth, we are moving really fast in the market. The products are being accepted very well. The brand strength continues to show in numbers. We achieved our highest ever quarterly revenue of 14.25 crores. So this is almost double that of what we have done in the same year, the same period last year. In addition to that, Jignesh, one more clip. And in terms of our capacity expansion, we started working on contract manufacturing. Our first contract manufacturing site in Bangalore has begun operations. In fact, all the delivery containers that are rolling out of our kitty, they're all from this particular manufacturing facility in Bangalore. So our capacity is increasing as well. Let's move on. Over to you, Jignesh bhai.
Good morning, everyone, and welcome to this post-Diwali session, Q2 financial highlights of Yash Pakka Limited. So this quarter was phenomenal for us because we have achieved 100 crore gross revenue, which is driven by a 10% growth in the paper and pulp business. The cost of goods sold was slightly higher by 0.75%, mainly due to margins in molded, because our cost of production has slightly gone up, and we are still in the process of getting higher price realizations on the molded products. Consolidated financial results that you must have seen in the published results includes around 3.71 crore of expenses that we have incurred on the subsidiaries. So just to put a note that these are expenses, but these are kind of value creation that we are doing into the subsidiaries, and the realizations or the benefits of this would come in the coming years. PBT percentage to revenue is around 15.4%. Of course, on the molded side, it is slightly lower because of the hit on the margin. Subsidiary expenses are also, one of the factor. On the paper and pulp, we have still managed to improve our margins up to 17%. These are some of the key ratios. I think, mainly if you see compared to all the quarters are, PBT, PAT, EBITDA, ROC slightly lower than the previous quarters, but mainly because of the slight margin hit on the molded business. I think we are pretty sure that in the coming quarters we'll come back, because paper business again has done marginally well as compared to the previous quarters. Overall, paper, there is a growth of around 10 to 15% in revenue, also in the margins. I think molded business will come back on the margin side, and probably that would turn the results better as compared to this quarter in the coming quarters. So this is all from us on the financial highlight side. I would now request Shashank to moderate the sessions and take questions from all of you, and one by one, we'll try to revert on all the questions.
Thank you so much, Dinesh. I would request all the members of the audience to please press the hand raise button if they wish to ask questions, and we would be sequentially asking the questions. Naga Brahma, if you may please go ahead and ask the question.
Am I audible?
Yes, you are.
Good morning. Congratulations, a good set of numbers. I have few questions. I'll start reading it out. My first question is the pulp. I think we sell pulp to other companies also. Just wanted to know two things in that. One is the margins are better. Second, I came to know of late our competitors and the other users have started importing the bagasse pulp from outside India also. Is the quality and the pricing, where do we stand in comparison with that imported pulp?
Jagdeep.
Shashank, I'll take this question. So if we talk of pulp was being imported not recently, has not started recently, but it was coming since many years for manufacturing. But yes, if we talk of molded, is the best suited pulp. Bagasse is the best suited pulp for the molded products. Pricing and quality are in parity with the imported pulp. And the contribution, as far as contribution, what you said, so contribution on a ton basis, yes, presently as per the market scenario, it's better. But eventually we have to look on the holistic as a business review on a year-on-year basis. Whereas the manufacturing is not much. We only do around 900 tons on a monthly basis. So I hope I answered those questions.
You are saying the margins are in comparison with the other products that we sell?
Are comparatively better as of now.
Okay.
Yeah, but eventually we have to see the volume and the contribution on the sale will be.
Okay.
Naga, just to add to Jagdeep, pulp is definitely not a big focus area for us. We are mostly manufacturing pulp for ourselves. We have some additional pulp that we do sell to the market, and as Jagdeep said, it is at a decent margin. That said, we will, of course, one of our businesses molded fiber, and as you heard, Satish is looking to outsource that. So, of course, we'll continue to manufacture for that purpose. And we are also working very hard to meet global benchmarks when it comes to quality, to make sure that we are the best quality available across the world for bagasse pulp.
Okay.
Shashank, you can move on.
Yeah. My second question is regarding the compostable tableware product. I think we have 14 ton per day capacity, across some 11 lines. So my question is this issues with the machineries part, has it been sorted out?
we are continuously working to improve, but it is still not at the level we would like it to be. The total capacity is actually higher now. We pack it, it's about 18, 19 tons, the capacity. But the utilization still remains about 50 to 60%. So there are certain machines we haven't been able to sort issues, and it's now 4 or 5 years. So we are slowly looking to sort of move away from those machines and get into, there are other machines that we produce that the capacity utilization is about 80%. So we want to stick with those machines more and more. So yeah, there is a certain evaluation that has taken place, and we will try and make sure that we slowly try and rationalize the equipment that is there. Thank you, Naga. I think we'll have to move on. Shashank, if I can request you to limit it to 2 questions and ideally ensure that, otherwise we won't get a chance to answer everybody. But thank you, Naga. Thank you for your questions.
Thank you, Mr. Brahma. So, I would request everyone to please limit to 1 to 2 questions, and then if you have further questions, we can, come back in the queue later on. Also, if you can mention the questions on the chat box, if you're more comfortable with that's also okay. We're taking the next question from Mr. Vinu Varghese, please. Mr. Vinu Varghese.
Hi, good morning. Am I audible?
Yes, you are.
Yeah. Veda, I just want to ask you one question. Our combustible packages are based on agricultural pulp, right? And we are now moving to North America and gradually to North Africa. I just want to know whether combustible from agricultural pulp is the cheapest source. Because in your podcast, we used to hear about seaweed. Yeah.
It incidentally is the cheapest, but that's not our focus. The effort is not to be the cheapest, but the effort is to be the best. But there was a huge study that happened across the world, and we were actually rated as the most cost competitive product. That includes pulp, not just the pulp, but the ratio, because we do use some imported pulp in order to balance. But overall, we were considered to be the most cost effective across the world. So that is the case. But the focus as a company, we are shifting to more and more value addition. So cheapest is a good idea, but ultimately the idea is that how much value do we generate? So that's the core focus for the team and us as a company.
Yeah. One more question. When can we expect our combustible division to turn into profit?
Satish,
because
over
right now
to you.
Thank you for that very exciting question. This is something that I've been very consistently maintaining, that we are inching towards breaking even this year for sure. Next year is definitely going to be profitable for us.
Thank you. Thank you for this, Ved.
Thank you so much, Mr. Varghese. Thank you, Satish and Ved. We're taking the next question from Mr. Sandeep Varghese, please. Mr. Sandeep Varghese.
Hi, good morning. So I tell you the challenge I'm having. The challenge I'm having is that before I come to your meetings, I always make it a point to go through the previous discussions that we have and presentations that we have, because I know I don't want to kind of repeat a question and take away someone else's time, right? But the challenge I'm having is that when we look at the presentation that we generally put together, it would be great if we kind of take like a milestone approach towards what we're doing, because it's very difficult to track. So I'll tell you, I don't know if it's a problem which I'm facing, and maybe it's just me, but the problem I'm facing is that between last quarter's presentation and say this one, apart from the point on the Middle East expansion, all right, for me everything is sort of repetitive. Right? I don't see new information. There's no way I can track and see how things have progressed. Now, you're being a manufacturing concern and the amount of hard work that you're put in, nothing is going to happen in a short period of time. And I totally respect that, right? I'm simply requesting, saying that if we can please take a milestone approach, because then we can appreciate all the hard work that you'll do a whole lot better, right? I'm unable to, so barring the financial numbers, which are very clear and there's no ambiguity there whatsoever. But in terms of us taking a very long-term approach, because we are really excited about your firm, we're just not able to stitch a story over a period of time, right? So I'm just sort of hoping that we can maybe take care of that from the next time onwards. It would be really, really helpful.
Absolutely. Sandeep, couldn't agree more. And that's basically how we do business. Everything is based on certain targets. If you look at my slides, it's very clearly mentioned the last time and this time. So the milestone approach is being taken. If you see the presentation the previous time, the last slide is what we are going to do in Q2. And more or less, I should have what I can add next time is specifically how much of that was achieved. That's a good point. But what I did was that during my conversation, I mentioned that those things have been covered and added on what is the target for this quarter. So Q3 targets are specifically mentioned. There are 4 and they are on my final slides. So I think it should be about slide 5 or something in the presentation. But that said, we can make it a little more explicit. This is joyful for me to hear because, when we work in business, it is all about setting the clear targets and making sure that we track them. And we track them on a weekly basis. So very happy to share that. And I'm sure Jignesh Bhai is making a notes and Sachin and Jignesh Bhai. And what we can do is that next time onwards, we'll make it a little more explicit, but super happy to hear that you're noticing that. And we will definitely make sure that we are more explicit about it.
Thank you so much. And just a final point, maybe one approach, and I'm just a layman, but just one approach that you could take is just take a Gantt chart and kind of plot this in a Gantt chart. So it becomes very easy for anyone to interpret, right? So that's
also possible. We'll try and make it a little more interesting than a Gantt chart. I know Gantt charts can be there, but it's difficult to follow a Gantt chart. We'll see. We'll think about it. We have numerous systems to track, but Gantt chart can also be one of them. I just don't want to make it very boring in a presentation.
No problem. Thank you so much. And then my second question is that in the outcome of the board meeting document, which is released on the 29th of October, there is a point on Project Jagriti, right? And it says that the company has deferred the business item for capital investment for the next board meeting. So I just wanted clarity on what that is exactly.
So this has been back and forth. The Project Jagriti is the Ayodhya project. It's taken a little while, multiple reasons, but ultimately the responsibility is ours. The board, again, we went through a lot of debate in the board meeting. There's only one singular matter where Jagdeep is still concerned, which is to do with the value addition over the paper. So our focus as a research team, Sagar is also here, is basically to build a strong flexible packaging line. And that technology again is new. And we are, of course, very, very keen that we are all very clear on the technology. So in the board meeting, what transpired was that Jagdeep was very clear that he wanted to be exceptionally clear about the technology. So that's the only thing that is pending. That said, the board more or less has given the go ahead on everything apart from the coating technology. So just to clarify, that's the only thing. Jagdeep, do you want to add anything to that on the Jagriti front?
I think it's mix of new production line coming up along with the retrofit of the existing assets. So we want to sweat all of the assets what we have at the Ayodhya plant. So for the coating plant, as Ved said, we are exploring the type of coating recipe we want to go in for the flexible, which eventually have to be a low-cost solution at the best product proposition. So probably Sagar and team from the innovation team are working hard to get those recipes done, and they are tying up with European manufacturer as well. The coming week, they are having some meeting and brainstorming on the same project. Once we are through with it, we'll put that proposal to the board as well. So rest has been finalized apart from the coating.
All right, great. Thank you for your time.
And Sandeep, it won't wait for 3 months. We'll just do an interim board meeting to finalize. So it's probably scheduled to be within the next month.
Sure. That's really helpful. I'll tell you where my ambiguity was. It just seemed like the project as a whole was being treated in a certain way, right? Which is clearly not the case, right? And I think that's maybe the ambiguity.
Yeah. And our board, just to tell you, like our board is, we are very, very responsible towards the board, and they make sure they grill us properly. So that's what happens in board meetings. So we have to make sure we are very well prepared. So that's the only.
All right. Thank you for your time. I'll come back in the queue. Thank you.
Thank you. Can we move on to the next question? Mr. Praveen Sharma, please.
Hello, am I audible?
Yes.
Yes.
My question is to Satish. In the annual report, the recent one, you have mentioned in your address that this year will be a breakout year for Chuck, and we expect 3x revenues this year. So, as we see the H2 results, which is, I think you would target to come to around 84-85 crores. So, where do you see, do you see it achieving? Because based on H2, we don't see. The second part is, despite good turnover in Chuck or, tableware business, the losses have increased. So why is it, at least, with the increased turnover, I would have expected the losses to come down. If I can squeeze the third one, basically, towards the overall roadmap for achieving 500 crore top line and 100 crore PBT. So I would like way to put in, where do we stand after the half yearly results? Thank you.
Thank you for the question, Praveen. I'll take one by one. The first one is we projected to go closer to about 3x. I think we will get closer towards it.
I think Satish is not audible. I think he's somewhere in remote Vietnam trying to bring material. I'll try and add on, but I'm sure when he comes back, he can give more clarification. So I think what Satish was saying is 3x is pretty much on the cards. We will get there. As far as the overall profitability goes, there has been a hit because of the cost increases there. But here in the Chuck business, we have very long-term tie-ups with our buyers. The buyers are relatively big QSRs. So that is taking a little time to revise, and I think the effect of that will come. As far as the overall targets are concerned, we are the top line. We see that we may not meet this year, but we are still very, very keen on meeting the bottom line, and that is the work that is being done within this and the next quarter. And the effort would be to try and at least come close to hitting that 100 crore mark. I hope that helps, Praveen.
Yeah. Thank you. And last is, regarding the depledging, I, understood from Jignesh Bhai that the work is in progress and hopefully it will be completed. So I don't have any question. I just wanted to,
Yeah. But Jignesh Bhai, can you further clarify that? Where is it?
So because there are, sorry, sir. So there are a couple of questions also on the chat box regarding the share pledge deal. So basically, the approvals has all been received from the bankers. There is some technical glitch in terms of the total security perfection that we have because we have got so many parcels of land. Couple of land parcels were to be pledged with the bankers, and the bankers are insisting that that technical thing has to be sorted out. And we have now worked out a formula with the bankers. So this we should get these things closed by, say, next 1 month or so. So it's only a technical issue, nothing related to the decisions of the bankers are still that the shares has been depledged from their side. Only thing is for finally approaching the NSDL and getting the pledge removed, there is this formality has to be completed, which we are in the process of doing. I think, we have taken a target of 1 month, but we'll try to do it as early as possible.
Thank you. All the best. Good luck.
Thank you.
Thank you so much. That answers a few questions on the chat board also. We're taking the next question from Ms. Geeta Jain, please. Ms. Geeta Jain. I'm afraid she's not in the meeting now. Mr. Naga Brahma has some more questions for us.
You want me to ask the questions which I have posted in the chat box?
No, I go right ahead.
Sorry?
I'll ask the questions.
Okay, fine. I'll unmute.
Yeah. So he asked, when are we going to start Zomato orders? What are the issues? Once we start processing the Zomato order, what is the margin that we are expecting from this division?
Ideally, Satish question. I don't know if he's managed to log back in. Satish, are you there? Okay, so I'll try and give the answer, but of course Satish should have been more detailed. So the key is to be able to provide material at scale. The Bangalore facility is still producing relatively lower volumes. So, for us to be able to fulfill the requirement from Zomato, it'll still take time. And we are also trying to make sure that the quality of the product is as per need. We are still trying to sort of perfect that. The second is Satish is just now, he's been all of last week in Thailand and then Vietnam, because what we are realizing is the scale that we want is not being able to achieve even through outsourcing in India. So he is looking at finding partners who can build our designs and our products outside India, but then also looking at bringing them into India, because the kind of scale we want, we need more speed, and that is not being able to be achieved. So again, but coming back to your question, we need to finalize and maximize the requirement first, as well as the quality, and then we can look at ensuring that we work closely with Zomato.
Thank you. He has one more question. What are the capacities that we are creating at our franchisee partner in South India?
It's still very low, as I answered. It's not as we would have expected it to be. So we are still at about maximum of about 3 to 5 tons a day, which is relatively low. We want at least 30 tons a day, ideally, of outsourced capacity. So that's what Satish is working on right now.
Okay. He continues, if the issues with the machineries persist at our end, how will the franchisees start manufacturing the products?
Well, there are two different aspects. Our end, we've made some investments where I would say we haven't been competent enough to resolve the technology. And of course, China being shut and COVID hasn't helped. But that's it. In the end, we haven't been able to resolve it. The technology and the machinery is totally different when it comes to franchisees. So that is basically not going to correlate to what we are experiencing at our end.
Thank you so much. Can we take the next question from the username 1+925G, who has a hand raised?
Yeah, sorry. My name is Dinesh Jain, and thanks for giving me an opportunity. You are able to hear me, please?
Yes, please go ahead.
Yeah. Now, my question is, power and fuel cost, I have seen gradually increasing from around 8 crores to 12 crores to 17 crore today. So I wanted to know, what steps, why this increase, and what steps we are taking. Are we buying any power from merchant market through power exchanges, or are we planning to put up some solar, renewable energy thing, kind of a thing, or are we tying up with somebody else? Because these are exorbitant increases. So this is one question, yeah.
So I'll take this, Rishad. Yes, power has been, the fuel pricing has been drastically increased because of various sectors. So probably shortage of coal, the imported coal has shot up to almost 300% now. So we also looked at, and we are procuring an alternate fuel as well to curtail the costs. But looking at this scenario and off season, so we have gone ahead and secured the fuel so that there is no shortage. So across industry, manufacturing industry, if we see there has been a shortage of fuel, but we are well placed for the fuel inventories, and we see it coming down.
And 2 months down the line, when the paddy season will be on. So it's on, would be on from November and so. So we'll see a reduction in fuel pricing. But yes, not in parity with last 2 years' pricing, because overall there has been a scarcity in the fuel.
So are we trying to tie up with somebody for renewable sources or something like that?
So if we talk of renewable sources, capex and the power and the power pricing is far higher than what we are producing at the pricing with the existing price as well. On the grid sourcing also, we are tying up for the grid connections, but that's to meet out the scarcity of power requirement, not for holistic view. So we will be utilizing this power in a peak season for the raw material and fuel storage, not for the throughout the year.
Just to
Okay.
further add, just to give further clarity, what Jagdeep is also trying to say is that we are off grid. We don't have any grid connection right now. And all our power, entire power is renewable. All our power is manufactured from biomass. And it is still much better in terms of costing if we compare it to the grid. Jagdeep is trying to now tie up with the grid because of not enough power availability within the campus till we expand. So it is for a 2-year period that he'll tie up. But that's it. All our power is renewable. We are completely off grid, and the overall cost of power is lower than what is available at the grid.
Okay. What is the power cost per unit as on today, approximately?
So it varies on the inventory, but as on date, it would be from 6.5 to 8 rupees.
Okay. So actually, just as an information, I'm telling that on merchant market, if you tie up and buy it from exchanges, today it is available at 4 rupees and 5 rupees. So
But
it's
again,
just an information, yeah.
yeah, but again, if we see in case we tie up, it will be a process of almost 1 year. By the time we'll be up with our own cogen, which will be much lesser. So there's a peak season. Year around, if we see, we are much lower than that renewable resources across the year. So it's a momentarily hit on the pricing, but overall it will be much lesser.
Let's keep moving, Shashank.
Yeah, thank you so much. We'll move on to the next question. Ms. Geeta Jain is back in the audience. She had lost connection before. Ms. Geeta Jain, would you like to please go ahead?
Hello, actually, this is Jain. I logged in from my mom's side because there was some technical issue.
Sorry, you're not very audible.
I'm audible? Hello. Now I'm audible?
Yeah.
Yeah, this is Sayam Jain, one of the investors. Actually, I logged in from my mom IDs because there was a technical issue with my ID. So, my question is for Mr. Ved Krishna. Sir, what is the approach of our company related to the paper straw business? Because since we are observing that many companies have started using paper straw as the essential item, but still we are heavily dependent as a country on the imports of paper straw. And since we are already, always doing innovation in the paper field, so are we doing something related to paper straws, which is a big business of our industry? This is the first.
No, Sayam, not at all. We are not. We are very, very clear on the areas we are focused on. The 3 areas are food packaging, food service, and food carry. Paper straws, or I would not say paper straws, straws as such is part of the food service business. We don't feel that paper is the right substrate at all. And so the research team does work on straws as such, but we feel that for many, many reasons, paper is not the right substrate. It could be a temporary relief because of bans on plastic, but there are better ways to take a drink from something to be able to create a suction and take it up. So there are better ways to do that. The research team is continuing to work on numerous possibilities. But paper is not one of them. We don't think paper is the right one because it has glue, it has numerous other issues of a certain amount of sogginess after a certain period. We don't feel paper is the right substrate. We are not at all focusing on that area.
Okay. And my next question is that since we have observed that the employee benefit cost has been increasing the employee benefit cost has been increasing year on year and quarter on quarter very much. So are we expanding with the number of employees, or are we just providing benefits or ESOPs to the existing employees? Because that creates a concern, because on a consolidated basis, our profit is decreasing. We are not able to make much profits. And on the other side, we are continuously increasing the salaries or the benefits to the employees. So I want to ask, what's the strategy behind that?
Jagdeep, do you want to take it up?
So the voice was not very clear. Can you just...
Basically, he's asking about the continuous increase in employee cost vis-a-vis turnover. What is the strategy behind?
Yes. The cost on the employee benefit has increased in the quarter, and year on year, it's more to relate to the talent acquisition, what we are trying to do across the organization. Along with it also has in quarter two specifically, it also has to relate with the ESOPs, what has been allotted to the team for the employee retainership. Hope I'm clear.
Yeah. Thank you so much.
Yes. Thank you.
We move on to the next question. Pranav is asking, what will be the capacity of compostable mineral-based pellets? How much revenue can we get after full capacity?
Pranav, it's too early to be able to say that. Sagar, do you want to highlight the technology a little bit? Of course, I know you are under IP and NDAs to be able to do that, but just a very broad outline and what is expected.
Good morning, everyone. So, to give a very brief idea is, it's as Ved was highlighting, it's too early to come and understand what is going to be the entire project cost. We have a basic understanding. Our current focus is on the kind of substrates we are working, what is the product market fit for these final application products which we are trying to make. So there was a question regarding straws. So we are making straws like this, we are making spoons like this from all these materials. I just wanted to show that our focus is to create more prototypes and do test them in the market. So that's going to give us some more visibility and confidence. Later is the stage for how the project is going to be and what kind of revenue generation will come. Yeah.
Thank you so much, Sagar. The next question is from Logesh. He's asking, 32 crore is there under capital work in progress. Is this towards expansion at Ayodhya plant?
I'll take that question. So, Logesh, I think you've got two questions. I just went through them. So first one was about the CWIP. The CWIP includes certain ongoing projects which are not directly related to the overall expansion. But when there are certain facilities which are being created right now would help us to have a slightly lower capex when we go to the overall Ayodhya project. Right now, the figures that you are seeing, they are all smaller individual projects and not directly related to the Ayodhya project. Not related to the expansion per se.
Thank you.
Shashank, there is one more question from this gentleman.
Jignesh bhai, you can go ahead if the question is clear, because Shashank may need to scroll and find it.
Yeah. So the second question is regarding this 5 crore of other income which has been shown during this quarter. So Logesh, this 5 crore this year includes the 3.5 crore of income coming from EPCG income, because what happens is when we have procured certain machinery, they were procured under EPCG. Now, as per the Ind AS accounting system, when the export gets completed, those has to be accounted back as an income. So this quarter, fortunately, we had really a good numbers in terms of exports. So all our EPCG liability has been completed, and all the income which was to be booked has been booked in this quarter. So it also includes an income of around 3.5 crore coming from the EPCG. The rest are all your regular incomes, regular other incomes. Hope that clears your question.
So that question was from Vinay. I hope Vinay that answers your question. We'll take the next one from Rishu Dhawan, please.
Hi, good morning, good evening. I have two questions, both related to the Ayodhya expansion. Number one, what is the kind of amount or the money which we are, or as a capex which we are thinking to spend on the current phase of Ayodhya expansion? How we are going to fund that amount? Second, what is the kind of timeline for the expansion? If you can walk us through, like, on a very high level, something as a layman, I can understand that, okay, building, then purchasing the machinery, then spending 2 months into the sampling, eventually leading to 2 plus 3 plus 7 months, something like that, okay, after these many months or these many quarters, we'll see the impact on the revenues, or the revenue started coming from that expansion.
Yeah. So this total Jagriti project should be around from 300 to 400 CR of value approximately, depending upon what coating machine and the formulation we finalize. And the timelines for execution of this project, commencing the production, would be around 14 to 16 months.
And how we are funding that 300 to 400 CR amount?
I'll take that question. So, Rishuji, what we will do is of course, will be a combination of debt plus equity. Basically, we already have some really good connections with the banks, and the banks has given their soft commitments in terms of the amount. Because we are still looking at, the final numbers to come in. We'll utilize certain portion from our internal accruals, very small amount. The rest would be debt plus equity. Equity would come from various sources. So that still we are evaluating. Once the project amount gets finalized, we'll come up with that plan, and maybe in the next quarter we'll be able to spell out very clearly.
Okay, thank you.
Thank you. Mr. Aman Bhalla is asking, what is the funding plan for the American expansion? Before this, we have another question from a gentleman, but he's not in the audience now. He's saying, what are the reasons you have decided to put manufacturing plant in USA rather than exporting from India? So 2 questions. The reasons and the investment plan.
Sure. So Northern American market is a large market, and there's a lot of demand that we get from there. It's very difficult to transport from India. It takes typically that the best possible scenario is 2 months from lead time, and that the world doesn't function on. The second is overall carbon footprint. If you are transporting from across the world, that's not really ideal. So the idea for us is to be able to get closer to the market and manufacture there. And we have identified more or less Central America and a couple of countries within that we are trying to close. Ideally within this quarter, we will close that, and that is one of our targets in this quarter. As far as the structuring goes for funding, that is still on. We are looking at it's mostly either a strategic partnership or through a PE kind of investment by dilution in our American entity, Pakka Inc. So just now, Yash Pakka owns 100% of Pakka Inc. We might have to dilute a little bit and get some equity investment. And also there is a lot of strategic play that is happening. So it could be some of that as well. There will be SPVs, there will be JVs. Still the conversations are on, but the idea is that within this quarter we decide the location as well as the financial structuring. But the basic idea is to tap into the US and the Northern American market.
Thank you so much, Rohit. Mr. Gaurav Sachdeva, would you like to ask a question?
Hello, Ved sir. I'm audible?
Yes, sir. Please go ahead.
Although all my questions have been answered, but just to ask, do you have any plans to list Yash Pakka on NSE?
Sachin?
Yes. Hello. Myself, Sachin Kumar Swasta. I'm the company secretary of the company. We are in process of listing the securities on NSE. So most probably by 15th December, we will be on the NSE.
Thank you, sir. Thank you.
Thank you.
And
yes, sir, please go ahead.
one thing I missed, I think Jagdeep sir was answering. What was the timeline you answered? It was 48 to 60 months or 14 to 16 months?
16. Approximately 16 months.
16, 16, right?
16, yeah.
Thank you. Thank you, sir. Thank you. That's from my side.
Thank you so much. We have a question from Mr. Rajendra. It says, can we expect to maintain quarterly revenue of 100 CR going forward? And what's the target for FY23-24 for top line and bottom line?
I would definitely hope so. Now that the cadence is there, I think both Jagdeep and Satish are not people who go backwards. So I think the operations team is extremely strong and they are very, very focused. I would definitely, I think both of them believe in beating targets. So I think with them and the leadership and the kind of teams they are building, I'm quite confident that it'll be upwards of 100 crores in this and the next quarter. The overall target, as mentioned before, was 500 and 100. We are definitely focusing on hitting the bottom line target, if not the top line target. So at least that's the aim and the focus. And of course, the team is at it, and we'll definitely try our very best to come close to those targets.
Thank you. Mr. Jilani Sheikh asks, what is the staff strength at Bangalore Innovative Center and what are the areas of research?
Wow, that's a good one. Sagar, do you want to take that? Do you want me to take that?
You can take it if I can. No problem.
Okay, so we are very, very excited. So I'm stepping into Sagar's shoes because of that, because this is probably an extremely exciting area that we are trying to step in. Sagar has been building the team. I think we are upwards of 10 people now. I think, Sagar, there must be 5 researchers, I think, doctorates with you now, all from different parts of the world. They have been researching in the compostable packaging domain. We have some strong leadership also coming into place, and again, global, very high quality intellectual strength with a lot of patents and IPs that is being brought in. There is a huge exposure that we'll take in terms of the lab facilities. Sagar and the team have already ordered most of the equipment. It will probably be, Sagar, the first biodegradation lab in Asia. So I think that working on cellulosic chemistry, looking at bioplastics, I think holistically it will be probably one of the first very, very focused compostable packaging labs in the world. Super excited about it. We are, I think, investing a lot of time and effort. I think Sagar's team is going to be in Germany this week, trying to again look at numerous projects that they're doing globally. So yeah, excited about that. Sagar, happy to have you add a little bit more, please.
Thank you, Ved. Ved has covered the critical essential points. So just to add, the focus of the team is to develop key material substrates or innovate materials which are going to be used for compostable packaging at scale. So that's the prime agenda, and we are looking forward of how we are going to disrupt the packaging which is used in flexible packaging in the food service as well as in the food carry. So that's how I would like to summarize. Thank you.
Thank you. There's another question from Mr. Binu Varghese. He says, hi Ved, earlier we were talking about 3 outsourcing partners. Right now we have started with only 1 partner in Bangalore. Are the other 2 partners still on our plans?
That's bane of Satish's existence, and he's frozen at the right time. Satish, are you still there? I think Satish and the team there has been running helter-skelter trying to make this work. And it has been a very uphill task to be able to find the right partners and to be able to find the mindset of excellence that the team wants. So it's been a real challenge for the team. I think we've burnt our fingers twice completely, struggling with the third now. But that said, we are quite confident about coming up with that. What Satish has been working on now is to actually go even beyond India, because what we are realizing is that there is still difficulty in finding the mindset that we want in terms of excellence and in terms of productivity in order to be able to build the kind of products we are trying to build. So Satish is just now sitting in either Thailand or Vietnam. I don't know. He was in Thailand till 2 days back, where he is now. But the idea is to again find the right resources. It's not about having 3 partners, but having the right capacity. So it could come from 1, or it could come from 10. So both those things are being worked at. We don't want to suffer for capacity. So that's the basic idea. And I think Satish is at it, and I'm sure you'll see difference coming in within at least this year.
Thank you. We have one more question from Mr. Nagarwala. He says, we have a tie-up with a Swedish company for paper making. What are the benefits of this arrangement, and are there any royalty payments to be paid to them?
There is no tie-up. We had one research project, but that was a while back. So we don't have any tie-up with any. There was a research project with a Swedish organization, but that's over and done with.
Mr. Loki has another question. You had guided for 100 crore PBT. Could you throw some light on how we are planning to achieve this number this year? Is this purely based on price, or is there any action that is getting commitment this year?
Already answered, Shashank. We've answered a few times. Gaurav, can you mute? There's a lot of sound. Yeah. So, thanks.
Mr. Sandeep Varghese, you'd like to ask a question?
Yeah. So, I know in the last time we spoke, we did speak about a huge sort of demand for the compostables product, right? And I know you all are facing a large amount of time, you're chasing behind adding capacity there. I just had a layman question. Have you ever considered the Motherson Sumi approach towards adding capacity?
What is that approach?
So the approach essentially is that when you have large customers, right? So like whether it's Zomato today or another company tomorrow, and they are large customers, and these customers essentially committing to a certain volume, right? So to be able to facilitate that volume, guarantees have to be made by the customer upfront. Based on those guarantees, you then go about acquiring capacity, right? And that essentially was the Motherson Sumi model. So I don't know if that makes any sense.
We are new to this area, but especially for the global project, that is becoming imperative. When we are trying to raise funds, typically the investor is very keen to see back-to-back tie-ups. So that's something that we are working on now, but relatively new to that idea. Satish is just back. I don't think Satish heard the question, but Satish, the idea was you did. Okay, so you can put more light on it.
Yeah. No, go on, please.
Yeah. So the basic idea is to, yes, we will have to do those tie-ups because that also enables funding. But yeah, relatively new to that domain of, we have, of course, in the past have a lot of letter of intents from customers, but now it's a different story because we are getting very clear push from the customer that they need a certain kind of product. So we are still, I think, developing ourselves, understanding that, getting the products right. So I think in the next year or so, we would probably get better at it to be able to get those demands in terms of very clear tie-ups from the customers.
Thanks, Sid.
Thank you. Mr. Nishant Baid asks, can you throw some light on the current inventory level?
Jagdeep? Jagdeep there? I think the inventory levels are, I would say, inventory levels won't be high. There's some inventory in the molded fiber because of certain non-moving products. Satish, I don't know if you want to throw light on that, but paper, I'm sure it's very, very low.
Yeah, it's very minimal. So the inventory levels have come down by about 66%. We are somewhere at about 3.5 crores. And those are some of the products that are not necessarily the fastest moving ones. But other than that, we have, as I have been explaining, we have stockout situations, which is again a good problem to have, where we are trying to build our capacities.
Just to add to that.
Sorry, I lost my connection. So the inventory levels on the molded, I think partly Satish has answered. So have drastically been reduced. So almost 70% of stocks have been reduced in molded. On paper side, we have a bare minimum inventory of finished goods.
Thank you. There is a question from Mr. Rajendra Yelvar. FY23-24 target for Chuck for revenue and profits. What is the margin expected for Chuck going forward?
I would expect a 2x revenue growth in the next financial year. With the current business plan calls for anywhere from 3 to 5% margin for the next year.
Thank you. Mr. Gaurav Sachdeva has a question. There was a case of insider trading. What are the steps you have taken so it never happens again?
Mr. Gaurav, I would answer this question. Mr. Gaurav, the company has already expressed its intention that the company has zero tolerance policy for such cases. The company has issued a warning letter to the concerned insider, and all the profits earned by him during this transaction, although it was a negative profit, but considering the same, the board has imposed a cost of the profit plus 10,000 rupees on the concerned person. So our intention is clear that we are not going to tolerate such any type of such incident, and we expressed our disclosure in details over this to the structure. Thank you.
And that said, we know that it was done from ignorance and not from a malintention.
Thank you. There's another question from Mr. Naga, which says, what is the current capacities of pulp and paper as on date, and what is the capacity utilization as on 30th September 22?
So, as on current figures, the capacity utilization is almost equal to 97%, and we expect it to be above 100% because any manufacturing industry in pulp and paper operates at marginally around 110% of and above capacities.
Mr. Abhishek is asking, have we applied for any patentable ideas? Can we get more details on IP from Yash Pakka?
I would like to answer. Yeah. Hello, Mr. Abhishek. We have already applied one patent for the flexi pack structure. We have got the patent pending status for that. The final patent, we have another 6 months to submit with all the clauses and terms in it. The second patent, we have done the prior art on the prior art research on the mineral pellet. We will be submitting the patent by end of this month. So effectively by end of this month, we will have 2 patent pending status for our 2 patentable ideas. Yeah.
Thank you. I believe we have one question from Mr. Dinesh, who's with the idea.
We should also take it towards closure the last 5 minutes.
This should be the last question.
Yeah, good.
Yeah. Thanks for the opportunity. My question is to Satish, about one partnership subcontract partnership which we are having. So how our delivery containers are getting received in the market? Plus, are we on with our tie-up with Zomato or any big company?
Satish is in Vietnam and his connection is freezing again and again. So I think there were 2 parts to the question. The second part was the Zomato one, which we've answered. The first part was what, Shashank? Can you just clarify again?
Yeah, it was how our delivery containers are being received in the market, about quality wise and all.
That's a good question. Still struggling. I would say the first batch that has, like last month was the first lot. It's not as per our design. We have, and that's the challenge that Satish is facing from the outsourced partners. We have to still get our systems absolutely right. So yes, they are successful, but not as successful as we would like them to be. So basically, looking at sorting those problems, Sagar and his team is at it this month to resolve all challenges at the partners' end. We are confident that the batches going out from here on will be as per spec that we had created earlier. Zomato question we've answered. We need to build capacities before we can tackle that kind of size. So I would say Satish is on it. I think, again, sitting and traveling all over the world, Satish, to find the right supply chain. So Satish, there were two questions I was answering on your behalf.
Sure.
The first was the quality of delivery, and I've informed that there are still things that we need to resolve. And the second was Zomato, which what I have said is that we need to build capacities and the right product spec to be able to tackle that kind of size and to be able to push, in case you want to add.
No, I think that's perfect. Yeah, there's quality improvements that are being pursued. Again, first time ever we are making products that are this deep, and that has resulted in some concerns which we are addressing tirelessly. On Zomato, I think where you very aptly put it out there, we need capacity, much larger capacity than what we have today if we have to get in with them. And I sincerely apologize to all of you guys. My connection has been extremely poor. I'm sitting in a remote place in Vietnam trying to look for, working with manufacturing partners. So it has been very sketchy.
Shashank, if there are any pending questions, we can take them and then close.
Just, few more questions, and we closed questions after that. So, as per Mr. Satish, Mr. Rajendra is asking, as per Mr. Satish, if chuck margin will only be 3 to 5%, will it impact overall margins on consolidated level?
It's probably for Jignesh Bhai, but from Chuck standpoint, we have been losing money in the past. As I said, we are trying to get to break even this year and then looking upwards. Even though the target is much higher than what I stated there, I think it will be prudent for us to take a very cautious approach, especially with the market conditions changing at a very, very swift pace.
I would add to that. So, if the, as targeted, when the molded comes into positive numbers, the overall margin will improve because as of now we have negative margins on molded. So on overall margin will improve and it will also improve on a percentage basis. So I think we are very hopeful on that. And thank you, Satish, for that.
Thank you. One question from Vinay. Sales rises by 36% quarter on quarter, but power and fuel rises by 112% quarter on quarter. What is the reason for this?
I think Jagdeep has already answered, Shashank.
I think we have already answered, Shashank.
Then last question from Mr. Jilani Sheikh. What percentage of income do you have you committed towards innovative center?
I wish we could have committed more, but I think it's just now it's upwards of about it's around 2%. So for now it will be 2%, but our hope and prayer would be to go to over 5% in the coming times, because that's the only way we can build the kind of future we're trying to build. We have to invest a lot in innovation. I think Sagar and the team are building a very strong center, and we will support them to the fullest. And they are not only looking at the coming 1 or 2 years, which they of course are, but they're looking at the next 5 to 10 years as well, through global tie-ups and everything else. So as a company, we will continue to invest significantly on innovation, starting with about 2%, but our target will be at least committing to 5% next year onwards, as we gain more strength on our balance sheet to be able to do that. So on that note, thank you all again for all your guidance, for your interest in the company, for your support with the company. We are of course really, really indebted to you for being so keen on the work that we are doing. I can assure you from our side that, as you can see here on the call and otherwise, we have an amazing team, and they're really putting their heart and soul into this mission that we've undertaken. We are taking a lot of leap of faith. There are numerous directions in which we are heading. I'm sitting in Northern America, mostly spending my time in Central America, trying to resolve that. Jagdeep is in Ayodhya, trying to work on a project there, which is of significant scale and a lot of new technology and ideas, and also looking at another site in India. Satish, as you can see with his connection, he's been all over the map trying to build that supply chain, which he is clearly, that's the only way we can succeed in the business he's in. Sagar again has been, burning midnight oil trying to build this innovation center, and he has really built the team from scratch, and we are very excited about that. And the finance team is here as well, and they are looking at how to finance this crazy growth that we are looking at. So with all your support and your blessings and your good wishes, we'll continue to do the work we are doing. Please do have trust in us, and please help us and with your guidance as we move forward. Thank you all for joining the call. We will definitely see you next quarter. That said, please keep sending your questions to Sachin and Jignesh Bhai, and we keep compiling them and make sure that we are answering them in every quarter. So thank you again for your support, and a very good day to you.
Thank you. Thank you so much, everyone.
Thank you, everybody.
Thank you.